Hey, what's up, good people? Welcome back to Stock Up with Larry Jones. Hey, go ahead and hit the like, subscribe, and the notification bell. For those of you that are new to the page, my name is Larry Jones, and we are the family known as Stock Up. Anything I say is not a suggestion for you to buy, hold, or sell, and please do not fall for any spam in the comment section. If they say they're me, it's not. Never send money or crypto to anyone. I don't have a WhatsApp. I don't talk about a broker, and I don't DM on Instagram. It's not me. All right, let's get right into what's very important right now. JP Morgan came out and said something very shocking to a lot of people, but it's kind of in line with history, actually. And they said that the S&P could reach 4,800. Yep, the S&P could rebound to 4,800 in the second half of this year. Now, in a previous video, I showed you guys where most of the time the market actually hits new highs before we go into a recession. After we get signs that a recession is in fact coming, the market goes into a bear market and then shoots back up to new highs. So I have a question for you at the end of this video. I got a few notes here. We're going to look at a few charts. Let's just go right into it. You can see it right here. JP Morgan, mid-year outlook shocker, sees S&P 500 round trip to new records. Okay, so here's what's kind of crazy about this. If you look at this right here, good people, you see JP Morgan, right? Then you see stock market, right? But then you see stock market hasn't priced in recession yet from Fortune. So it all depends on who you listen to. JP Morgan is, they see green days, Fortune see red days. And it's quite shocking how many different, messages that are out there that are confusing people, right? So now let's look at this. If the S&P reaches back to 4,800, look at this, good people. Let me blow this up for you. It actually is saying that we will regain all of the losses this year. The S&P has sold off this entire year. Actually, it peaked in January. And so you're talking about a 21% upside from here, right? So let's continue to dig into some data here. The stock market looks like it wants to trade sideways right now. In the average bear market, we lose about 35% during the average bear market, right? But every bear market does not lead into a recession. There's more bear markets than there are recessions. We are in a bear market. We've been in a bear market pretty much, you could say, this entire year for the last 6 months. We've just been trending down, 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 down. So I just want you to know that time frame. Also, in a previous video, I showed you guys where most of the times when the 10-year and the 2-year curve inverts, the yield curve inverts, we're heading to a recession, right? GDP, gross domestic product, is going lower while inflation is going higher. We're heading into a recession, and most analysts think that recession will happen technically in Q2 of 2023. Now, I believe that we are in a soft recession right now, but let's just go with the data, right? So my question to you is knowing that the market could potentially be going up. I see it in fourth quarter because inflation still has to come down a bit. But let's just go with what they say. Second half, all right, which we are heading into the second half of this year. The stock market, the S&P, could actually reach a new high, which goes with what I said in an earlier video. They're saying 48. And yeah, you could just say it was where we were. So actually a little higher than where we were in January. So 48 is what they're saying. Now, if we hit 48, what'll happen is a lot of people will pile back into the market and they will be all in, saying, yay, let's go. We've hit the bottom and there's no recession coming, and we're just pedal to the metal, right? And then what happens? A recession. I personally believe a recession is coming. There's nothing the Fed could do with his limited tools now. He had tools to actually go to a soft landing, but he's past that threshold. So he's too late to react. And when you're too late to react, I always say this: you don't run up to a brick wall and stop. You slow down, because if you don't slow down, you're going to smack that brick wall. And that's what I see that is happening. So now my question to you right now is, what do you plan on doing? Do you plan on getting back into the market? I plan on making some money until the recession, but keeping in mind that a recession is coming. So do you plan on getting back into, if you see that we can run up on the S&P another 21%. Mind you, a lot of your 401ks, S&P 500, right? And so if you could see that we could go up another 21%, which means most likely you could fully recover all your losses in your 401ks, right? I didn't say this. This is what the data is saying. This is the potential. Are you going to buy more stock? Are you going to get back in? Are you going to start buying dips now, seeing this? Let's say the stock stop falling and start trading sideways, which actually is a good signal for right now. We'll take that, long as it's not tanking. We've been tanking ever since the beginning of this year, good people. So my question to you is, are you going to ride this back up? Meaning, are you going to get in and invest now, ride this back up, or are you going to wait for the recession? Before you ask, I'm going to tell you, I am going to do some swing trades, and it's going to have timestamps on it right now, because when it runs back up, and this is what happens most of the times when we're in a bear market, that leads to a recession. Let me say that again. When we're in a bear market that leads to a recession, most of the times the S&P hits new highs. So we have this bounce. And then what happens is we forget that there is a recession looming. So let me know by leaving a comment what you plan on doing now that you see what's going on. So I try to paint a clear picture of what's going on. As a matter of fact, let's read this right quick. Excuse me, allergies got me losing my voice. All right, so let's just read this. Why stock markets could rally in the next 6 months. From a historical basis, time on one side of the stock market, whoever this is, chief investment strategist, we'll call him Mr. Snowball, right? In 2021, we had a price increase in excess of 20%, Stovall noted. Sorry about that. These pages, they want you to buy in. I ain't buying nothing. All right. And in each of the 20 years since World War II, in which we had a calendar year gain of 20% or more, the market then fell into a decline averaging around 11%. Most times the decline started in the first quarter. That's exactly what we've gotten this time around. If there is a silver lining in this historical data, he said, it is that any of the observations where the decline has started in the first half of the year, we go back to break even by the end of the year every time. All right. So you see what I'm saying? So this is a totally different article that I found that actually lines up with, we absolutely could go back up here and regain 4,800 on the S&P, right? So follow what I'm saying, good people. So that's what I wanted to show you. This is one of the things that could happen, right? But are you going to wait until the correction, which could happen in a year, which could take a year for the recession, not correction, recession to happen? Will you wait a year? Or will you get in and make some moves and stay in? Or will you get in, make some moves, and take profits and be ready for the recession? So that's what I'm going to do. I'm going to make some moves and I'm going to make some swing trades during the second half of this year. But I am not going to have all of my cash in the market because I am going to be preparing for the recession. And any of the gains that I make in this second half, if it happens, I am going to cash up and get ready for the recession. Please leave me a comment and let me know what you are going to do. But this is something, this gives you a short-term forecast and a long-term forecast so we can go in and kill it. You guys already know about my 2 links below. Hey, a lot of you have downloaded Moomoo but have not made your deposits, okay? I meet you guys on the street and a lot of people have commented, hey, I opened it up but I didn't make a deposit. You know what, good people? You can deposit a penny or just deposit $100. Deposit $100, you're gonna get 7 free stock, 1 free share of Lucid. And if you want to put $2,000 in there, you're going to get up to $25,000 worth of free stock. Either way it goes, when you click the link, read all of the promotions based on how much you put in. And then, of course, Webull still has a promotion. Deposit 1 penny and get up to $12,000 worth of free stock. Make sure you click my links below, all right? The top 2 are very important. We love you guys. Leave me a comment and let me know what you are thinking about this data, all right? Hey, live, love, laugh, and learn.